It only took me a few seconds from when this stock hit my high day momentum scanner this morning until I was pressing the buy button. What we're going to do in this episode is a deep dive on everything that's going through my mind in those first few seconds that gave me the confidence to step up to the plate. Today, in less than 45 minutes, I locked up over $13,000 in profit trading a biotech stock. No, my results are not typical. But here's the thing. I have over a decade of experience, and that gives me a tremendous amount of educated intuition. I want to give you the chance to piggyback off of that intuition. So we're going to do a deep dive here, and I'm going to break down for you my process of how I evaluate and know whether or not I should press that buy button. All right, now, if you have not already gotten yourself a copy of my new book, How to Day Trade the Plain Truth, this is a bestseller on Amazon, and I would love for you to get a copy. In this book, something that I did for the first time ever was I outlined 20 guardrails that I follow in my own trading that I think for me, they've kind of been like bumpers that have protected me from having really big losses and have kept me in this sort of sweet spot where I've been able to just keep grinding and grinding and grinding. With an account with less than $600 all the way up to over 10 million and still growing, these are the guardrails that just kept me focused on the next milestone, the next milestone, the next milestone. So no matter where you are in your trading journey, if you can adopt these 20 guardrails, I think it can only help you. All right, so make sure you check out that book and let's go ahead and jump into today's deep dive. All right, so we can jump in and start going over my trades for today. Trade two stocks, VRME and INTS. Very similar setups initially, but they both provided very different total profits for me on the day. All right, so first trade was on VRME. This morning, when I first sat down, I had missed an initial move on SOAR, S-O-A-R. So we'll look at that one just for a second. SOAR, SOAR, had put in a pretty big move like a week and a half ago. It's a recent special acquisition company, so it's a SPAC. And, you know, we had this kind of price action where it was trading at $10, and all of a sudden you get the SPAC merger news. It squeezes way up here to like $35, almost $40 a share. And then it retraces that whole move and sells off. So what we had today essentially was a bounce off those lows of 6, a nearly 100% bounce, as you can see, as it went up to $11 a share. That's impressive, but I missed it. So this morning, Friday morning, both my kids have been sick. So it's just, they're home from school, and, you know, these things get in the way of trading a little bit, but family's number one. So I didn't sit down until about 7:45. And when I sat down, you know, I'm loading up my computer, you know, kind of getting things situated. And I see that it's right at this level, right about here. And I was like, all right, well, you know, it had already popped up to here, and it was right here at about $10.25. Prices over here. And I thought, well, you know, could it do a first candle to make a new high? Kind of made a slightly new high, then it dropped, and then it popped, and then it dropped, and it popped up again. And I was like, this has got too much range. You know, I can't get in at 10.50. My stop is way down here at like $9 a share. That is way too far away. Not going to be able to manage my risk. So no trades. It pulls back. I was kind of now waiting to see if it would set up like maybe a 5-minute setup. And right in this area, I said, this looks like an inverted head and shoulders. So imagine someone, you know, just standing on their head. All right, so that's their head, those are their shoulders. And this person's got incredible balance on the very flat head. And those would be their arms. So an inverted head and shoulders pattern should resolve back to the upside. But in this instance, it did not. I was watching it right here. I had the level 2 up on it, and I saw at about $9.20. I was like almost punched it, but here's the thing that held me back. This topping tail right here, and this one right here. And at $9.50, there was a 12,000 share seller. And so with that seller there, I just thought, you know, I don't know. I'm not sure if I can trust it. So I almost punched it at 9:30-ish. So I saw some green coming in on the level 2 on the tape, and I thought, all right, maybe this is going to be like, third time, and then it busts through and squeeze up. And it did. It broke through that seller, goes up to 957, goes up to 975. And I thought, all right, well, okay, I missed it, but, it'll probably retest this level. And if it does and holds it, then I'll take the next trade for the leg up, and that's fine. Well, it did not hold it. It flushes back here down to like 840, whatever, or 850, whatever it was. And that was basically the rejection that I was like, all right, this one's probably done. And pretty much it's faded since then. So I did see some traders, some members in the room who, got some nice trades on this because you were sitting down early. So that's awesome. Congratulations. But nothing for me on that one. Okay, so sometimes that happens. You sit down, there's already been some good moves, but that stock is now fading. There's nothing else to trade on it. So then what do? Well, you start watching the scanners. And so I'm watching my scanners right here. And so this is my top gainer scanner, which is just showing me a list of the stocks that are sorted from biggest gainer to smallest gainer. And then right here, we've got our alert scanner. So this is giving me the alerts of as stocks are making new highs, sort of like right now as we speak. And I was watching this scanner, and if we scroll down here, scroll down, we would see that VRME hit the scanner. What time was that? Go back a little further. It was early. It was maybe around 8 or maybe 8:30. Let's see, we've got to go back a little ways here. So these are all the stocks that have been hitting the scanner today. So let's see. All right, so we have INTS. I've got a lot of tabs open on my browser now. My monitor's kind of like freaking out here. Hang on one second. So, all right, so VRME, what ends up happening on this one was it pops up and it does not hold its level very well at all. So let me show you. I'll just pull up the chart since my computer's kind of running slow right now. So VRME, this was right in here. What time was this? This was 8 a.m. All right, so this stock goes from $1.05 all the way up to $2.48, which was pretty incredible. This is what I call an algo spike. An algo spike is when a stock basically goes straight up. And these can go, 240 could go to 3, 325, 350, 4, 450, 5, 6, 7, 8, 9, 10. When they start going, they can go quickly. So what's happening here is algorithms are responding as orders are coming in, and all of a sudden you're getting this parabolic price action. So it's a bit, it's a lot to sort of explain it. So I'll just summarize it with that. I teach that extensively in our classes. So anyways, we get this squeeze here, and I press the buy button at $1.77. Right about here, I press the buy button at $1.77. This is the 1-minute chart, but if you looked at the 10-second chart, you would notice, let's see, where's my 10-second chart? You would notice that this did a micro pullback. Where is it? Right at about $1.77. So let's get this zoomed in here. Okay. So right at $1.77, where that yellow arrow is, was where we got a micro pullback. Just for a moment, you could see it hit a high here of about 81. It pulls back, and as it came back up, that's where I punched my order. So the problem is I only filled 7 shares at $1.77. But I pressed the buy button a couple of times, and now I'm filling in this candle as it's going up. And I'm filling at $1.95, at $2, and at $2.10. It ends up hitting a high of $2.48, and I held because I was thinking, all right, here we go. This, if it breaks over $2.50, I'm going to add again and look for a squeeze up to 3, and I'm going to probably keep adding every 25 to 50 cents on this because it's moving quickly. And we'll see what we get. It ends up reversing here, and I stopped out. I sold it, not with a live stop order, but I bailed out. sold on the bid, and made $105 on that trade. So $105, basically a break-even trade. And it rejected. It came all the way back down. So I think what happened on this was we initially got that spike, but it didn't hold. There was some news here, a share repurchase program. I mean, it sounded interesting, but obviously it just didn't hold up. So anyways, so that was VRME. That was my first trade of the day. Then I'm sitting here watching scans, and INTS hits my scans at about $7 a share. It's currently at $10. It's up 165%. So this one is our leading gapper today. On this one, look at the 10-second chart as well. Let's see. All right, so on this one right here, this one popped up and it hits my scanner at $7, about $7 a share. So by that time, it was already moving higher, as you can see. It hit a high of 8. It goes up to 9. Right in here, let's see, we had the high of 8, 840, and 9. I bought right in here 4,000 shares. I was like, I'm going to take a starter, well, 2,000 shares, and I add another 2,000 shares. It ends up hitting a high of $11 a share. Right through here, this is an ABCD pattern. I added for the break of 11, and it goes up to 12 and to 13, and I was taking profit into this move right here. And I locked up $13,500 of profit on that squeeze right there. So this was trading a stock straight off the high day scans, and we got that algo spike, but on this one, it worked. And I think what was different about this one was the catalyst. So the catalyst, this is a pharmaceutical company, and their news was presents positive, data in patients with early stage breast cancer. This is the type of headline that has given us big moves this year. Biotech stocks. Now, the thing is, when a stock hits the scans, all of a sudden it hits the scans at $7, what's my kind of workflow? All right, I click the scan, I click the stock ticker, it pulls up the chart, then it pulls up the news, then I'm going down to my level 2 window, I'm typing it in a second time, INTS, enter. Now I'm looking at the level 2, and from that point, I'm glancing up at the chart, the 1 minute and the 10-second, I'm looking for micro pullbacks, I'm watching the level 2, I'm watching specifically around $half and whole dollars. So the type of price action that I really like here is when we have the move up like this, the micro pullback here, and then that break higher. And I love it when that corresponds to a whole dollar, like 9 or 10 or 11, doesn't matter, or a $half. Because once the stock breaks over that level, while it could dip down and retest it, psychologically, this is a strong holding point then for the next leg up. So then if it goes up, let's say this is $10 a share, then often what I'll do is I'll add again at 10, and now my new stop is, as long as it holds this psychological support, I'm going to keep holding. And then if it goes up to 11, I can add again, as long as it holds 11. And next thing you know, I start with 2,000 shares down here, and then another 2,000, another 2,000, and I've got 6,000 shares at let's say $10 a share. And then it goes up to 12 to 13 to 14. And that's when things get, pretty exciting. That's when I end up having my biggest winners. So there's obviously a difference between that strategy of buying and adding and sort of the beginner base hit strategy of get in, get green, and get out. One of the things that I've noticed this year is that we have these windows of opportunity when stocks are making these really big moves. And that's the time when I need to be the most aggressive, when we're in that window. And then once that window closes, I got to take my foot off the gas. I got to slow down. So in the case of INTS, my last trade was at 8:45, about 8:45 a.m. So I traded this, I traded today for 45 minutes, basically, and locked up $13,600 of profit. When I did do some dip trades on INTS as it was pulling back in this area, support at the ascending support line. But then I sort of visualized this as another head and shoulders pattern, and I was thinking it was going to be coming back down. And that is what ended up happening. In fact, it kind of was riding this descending resistance line as it came back down, right? It wasn't really able to get above it. And then when it finally did get above it here, I was like, well, now we're below VWAP. And I don't know if I really want to trade it. And honestly, the level 2 on it, see how stacked those orders are? It's gotten kind of funny. It's really, I don't know, these big stacks of buy and sell orders, it seems now like it's a tug of war, and I wouldn't really be interested in trading it again unless it can break out of its range, which ultimately means, well, to me, the tipping point would probably be over like 12.50 for a retest of 13, 14, $15 new high, and then a move up higher. So I really don't love trading stocks that are range bound like this. I want to be trading stocks that are in a strong ascending channel where they're moving up, pull back, move higher, pull back, move higher. That's for me where I do the best. And this just isn't there right now. And this is an area where a lot of traders can get chopped up. Look at this candle right in here, for instance. See that candle? Let's zoom in on it. So that candle, look at this thing. I mean, that's no joke. This pops up from 10, goes up to 11, then drops all the way down to under 950. That's a candle that we call it a jackknife, and it hurts. It's, I mean, whether you're long or short, that's hard to manage risk on. And we've seen a lot of candles like that. And we're more likely to see them when a stock is in consolidation. It's range bound, which means its moving averages are basically flat. It's going sideways. So I'm trying to be a little bit more mindful to avoid trading when something's sideways and focus on when it's moving quickly. But the problem is, when you're really zoomed in here, this doesn't feel like it's moving sideways. You're like, oh, look at all this range. So you got to zoom out. You got to step back a little bit, zoom out, and say, big picture. What's going on with this? Is it making new highs? Well, no, it's not going to make new highs unless it gets over that level. And that's actually kept me out of a lot of trades this year. And even just in the past few weeks, because we've had a number of stocks where we had a nice big move pre-market, whether I traded it or I missed it, is aside from the point. But we had a nice big move pre-market, and then we go into this kind of consolidation chop. And things only get exciting when it breaks out of that level. MLGO was a good example of that earlier in the week. This one was, and this stock is a whole nother story. But in any case, once you're making new highs and you're stepping up, that's when things get interesting. And that's when you start seeing these bigger moves like this. So, a lot of trading to me is sitting and being patient and waiting for those opportunities. And also being willing to take stabs on things that are moving, like VRME. And if it's not working, get out quickly, get out of the way. So, one of the things that I've gotten pretty good at is just cutting those losses. And sometimes they're big. I have for sure my fair share of losses. I had a $5,000 loss on Tuesday. The week before, I had 3 basically max loss days in a row, 5,000, 4,000, 6,000. But I capped my losses, pretty well. So if you look at my losses this whole year, they're all, about that size. That's kind of how deep my red days go. I cut it and then I move on, and I know when to walk away. I've gotten better at that. And of course, I get some nice green days here and there that are good, and those certainly make up for. This is kind of the idea: cap your red days, don't cap your green days, and then you have equity curves that go up as long as your accuracy is greater than 50%, right? In terms of red to green. So I have to cut my losses on red days, and I mentally have a max loss of $5,000. So if I'm down more than 5, sometimes I fall victim to chasing something and going a little further. But generally, if I'm down more than 5, I tell myself just to walk away. Don't let one day, it's just one day. Don't let it ruin weeks of progress. It's just not worth it. And then next thing you know, was I bummed out in this $5,500 red day on Tuesday? I was. But I made back $4,600 then on Wednesday. Yesterday was $2,300, and now today is $13,000. And just like that, this red day is water under the bridge. Now, here's the thing: in the moment, when you're in the heat of this red day, it feels like, you feel desperation. You want to get it back. You feel frustrated, annoyed with yourself, disappointed. It's easy to feel those things, but remember, in this market, in trading, easy come, easy go. Just think about how fast you lost it and how quickly you can make it back. And maybe you're not going to make it back today, but maybe it'll be tomorrow, next week, whatever. And as soon as you make it back, I can tell you, I cannot even remember this red day. I can't remember either of these red days. I have no idea what I traded on those days. They mean nothing to me. Now, these red days I remember because I had a few days in a row. And this one I remember because it was just the other day. But the wisdom that I'm trying to share with you is how quickly this can be water under the bridge. And so if you can forget about it and it's like completely out of your memory 2 weeks from now, then like literally what is the point of spending any more time worrying about that right now today? Don't even worry about it. You'll make back that loss eventually. Just don't even worry about it. Put it behind you. Move on, move forward. Now, obviously, if you have 4 or 5 red days in a row, if you're getting your account down under, PDT minimum or something like that, you've got to make some adjustments for sure. And that's when we talk about checking into trader rehab. And that's what I did in this area here after those consecutive red days, because I was like, I'm giving back too much. I need to start rallying back up. And so the rule of thumb that I use when I have one big red day, if I have one big red day, look, life happens, this is trading. Trading is risky. So one big red day, I don't really think a lot of it. I can come back the next day ready to trade and it's fine. If I have 2 big red days, then I'm like, okay, 2 back-to-back max loss days, that's not great. I need to be a little bit careful. Coming the third day, it happens for a third day. That's when I start saying, okay, something is happening right now where whatever I think a stock is going to do, it does the opposite. So right now, for whatever reason, my accuracy is low. I'm not firing, I'm just like, something's not quite right. So the moment that I'm looking for that next trade, I have to remind myself that everything that I think is going to happen has not been happening these last couple weeks. So what I need to do is I need to focus on just trying to hit some base hits. So what I end up doing is, I've had this nice stair step up, whatever, and then I have 1 big red day, 2 big red days, 3 big red days. So now I'm like, all right, damage control. We got to stop the bleeding and start rebuilding this account. So this is where I set a max share size right in here. And I limit myself to like A+ quality setups that I have like 99% conviction they're going to work. So I trade a lot less. And then what usually ends up happening is I'll have, a small green day. Or if I have another red day, it's a small red day. But, eventually I start recouping. And once I've made back about 50% of this loss, that's when I take the share size restriction off and I can be more aggressive. I keep focusing on high quality. And then once I get back to new highs and I'm just like back in the zone, then, I still focus on the best quality. But if I want to take a B setup or whatever, now I'm back into the place where I'm feeling like focused and I'm doing well. So if you're in a drawdown, this is kind of the way I would approach it in terms of recovery. And I was just in a drawdown. I had a one red day on Tuesday and I'm recovered from that. But I had that red day streak 2 weeks ago that took about a week to recover from. So anyways, today I was able to step up to the plate. I think that there's more potential in INTS as long as it holds up. And also, so one of the things that I might have not mentioned was one of the first things I noticed was that it was a blue sky setup on the daily. All-time high was 675. So when you have a stock gapping into blue sky, I am almost always going to be more aggressive on that setup. That's something I really like to see. Once I realized it was a biotech stock, which wasn't, I didn't know the ticker when it first hit, but once I recognized that, I was like, okay, this is the sector that we want. Like this has pretty much, if I go through my checklist, price between 2 and 20, check. And within this range, it's kind of at a favorable spot of 5 to 10, which is where I tend to do the best. The volume, relative volume was high. Relative volume was very high. Total volume was low, but that's because it had news. And I was probably one of the first people to see the news because I'm scanning for the news. So news, check, relative volume is high. Relative volume on this today is 2,613 times normal volume. That is huge. And it's because there's news. Yesterday it had no volume. Today it's got 20 million shares. It's because it's got news. And then the float on this, we've got a float of, 13, about 8 million shares. 8 million share float. but it's also a somewhat recent IPO. So it's got these kind of like, multiple X factors. Blue Sky, recent IPO, recent IPO, Biotech, right? So like juice factor. So now those all sort of amplified the potential. It doesn't mean it's going to realize that potential, but it amplifies it. And this, I would say, is the educated intuition that I have at this point in my career. And this is what, you guys, of course, tuning in every day, Warrior members, get to benefit from. You get to piggyback off that intuition that I spent, more than a decade accumulating. So all of that, I was able to sort of, understand to the point of having the conviction to take the trades within seconds almost. And then as the stock was going up, then it was like real time, actively trading it, capitalizing as it was squeezing higher, and I'm in the zone. So yeah, I would love to see this continue to hold VWAP, and I'd love to come back and see it goes higher and curls. I'm not going to probably participate in that part of the move. It's Friday. I'm finishing the week here in good shape. But that's what I would look for continuation, would be for it to get through the highs and then start to pick up some steam. So anyways, I think for me, the easiest window has closed now that it's past 10 a.m. All right, so that was a breakdown on this trade, and I'm going to upload this recap to YouTube. So those of you guys that are on YouTube watching it, I hope you hit the thumbs up, and I hope you subscribe to the channel. It makes a huge difference. Some of you guys have been asking for recaps, and we have had in the last few weeks a lot of volatility, and so there's definitely the opportunity for me to do more recaps if you enjoy them, but I wasn't sure that they were people even really cared about them. So anyways, if you guys want recaps, then let me know in the comments, and let me know by hitting the thumbs up and subscribing, and I'll see you guys back here on Monday. And maybe if we get enough thumbs up and subscribers on this video, I'll do another recap on Monday. We'll see. All right, so that's it for me. Thank you guys for tuning in, and I'll be back at it Monday morning.